Callum, it's time to introduce you to your new crush.
Go on.
Canadian Club Lemon Crush.
Of course, the taste buds have been screaming for a change.
And Canadian Club Lemon Crush is listening, with its balance of lemony zest and the smooth taste of Canadian Club.
Right now, there are 2,500 six-packs to be won. Scan your can or enter online for a chance. And always drink responsibly.
Canadian Club Lemon Crush. This zesty refreshment is your new crush.
Good morning and welcome back to Start Here, the very special mini-series within SugarMamma's Fireplay, where I answer your real-life money questions with practical, empowering general advice. Today's question comes from Katrina, who has just started investing in high-growth ETFs with Vanguard. And she asks, Canna, as we will one day have another GFC-style slump, how long will it take for my portfolio to recover? Now, this is such a great question because it's the fear that sits quietly in the background of most new investors' mind. And that is, what if the market crashes? What do I do? Now, whilst we can't predict the exact timing or the length of the next downturn, what we can do is learn from history, use smart, intelligent strategies like dollar cost averaging, and focus on the right goals so that when those downturns happen, which they will, we can not only survive these, but actually and potentially come out wiser, stronger, and maybe even richer. So let's answer this question together. The reality of when markets crash. Okay, let's start with the truth here. Market crashes aren't rare. They're actually a regular, normal, and very healthy part of investing. History shows that major downturns, what we call bear markets, or when markets fall 20% or more, happen roughly once a decade. Some of these downturns are really short and sharp, and they recover really quickly. They're like literally a blip. You don't even realize, and you blink and they're gone. Like the COVID crash in March, I think it was 2020, where the markets actually fell almost 20% in a single month, but then actually recovered in around about 4 months. Now, that was actually the fastest market recovery in history over the last 150 years. Now, other market crashes take a lot longer. Market downturns that started in, I think it was late 2021, which were triggered by the war in the Ukraine. And then we, of course, had inflation starting to kick in. We had supply shortages. It actually took around about 18 months for the markets to recover. And if we look back even further, like the Great Depression, where we saw markets fall almost 80%, it took years to rebuild from that point. And the so-called lost decade, which is where the dot-com bust was shortly followed by the GFC, that actually took more than 12 years for the market to get back to their previous highs. And then there was the 1970s, the Vietnam War, Watergate, and the oil embargo, which caused markets to halve. From there, it took 9 years to actually recover. So what is the lesson here for all of us? Well, crashes vary. No two crashes are the same. Some are really short and relatively painless, whereas others are really long and really difficult and challenging. But, and this is the most crucial part for you, Katrina, the markets have always recovered. And they've not just recovered, but they've gone on to set new highs for all of those shareholders, all of those people like you and I investing. So what can we use from history to help us become wiser investors? So Morningstar Starter, and Morningstar, by the way, is a brilliant free resource for all investors to use, and I highly recommend. But they have some data that shows you if you had actually invested $1 in the US stock market back in 1870, through all 19 crashes of the past 150 years, that $1 would actually be worth over $3 million today, and that's after inflation. So yes, downturns feel absolutely terrifying in the moment. They can really make you question your decisions. But you've got to remember this. Over the long run, the trend has always been upwards. The real cost isn't actually the crash itself, but it's the panicking and then the selling, crystallizing those losses when prices are at their all-time lowest. However, if you actually choose to stay invested, history tells us that you're going to be rewarded at some point. You need to be patient. And this is why one of the best strategies that you can use is a dollar cost averaging strategy. By regularly investing the same amount, whether it's $100 a month, $500 a month, or $5,000 a month, regardless of whether the markets are high or low, because you automatically buy more prices when they're cheap and you buy less when they're expensive. Over time, this has an incredible impact in smoothing out the overall volatility, but also helps keep you on track regardless of what the market is doing, day by day or minute by minute or second by second.
Sam, it's time for me to introduce you to your new crush.
Go on.
Canadian Club Lemon Crush.
Of course, the taste buds have been screaming for a change.
And Canadian Club Lemon Crush is listening, with its balance of lemony zest and the smooth taste of Canadian Club.
Right now, there are 2,500 six-packs to be won. Scan your can or enter online for a chance, and always drink responsibly.
Canadian Club Lemon Crush. This zesty refreshment is your new crush.
Callum, it's time to introduce you to your new crush.
Go on.
Canadian Club Lemon Crush.
Of course, the taste buds have been screaming for a change.
And Canadian Club Lemon Crush is listening, with its balance of lemony zest and the smooth taste of Canadian Club.
Right now, there are 2,500 six-packs to be won. Scan your can or enter online for a chance. And always drink responsibly.
Canadian Club Lemon Crush. This zesty refreshment is your new crush.
So what is my general practical advice for you, Katrina, and for everyone else who is building a share portfolio and is wondering the same thing? How long is it going to take for my money to come back, and what do I do with these market crashes? Well, here are a few things I want everybody to keep in mind. Whenever there is a market crash or even a market pullback, stay focused on the dividends, not just the portfolio value. High growth ETFs are obviously very volatile in the short to medium term. They may feel like and look like that they're going backwards during a crash or a pullback. But if you look at the income, that is the dividends, often these continue to be paid, even sometimes grow over time. Now, it is the dividends that are going to one day help cover your bills and actually give you that true, authentic financial independence and freedom. So just look at how much your portfolio is paying you in income, dividends, passive income every single year. Don't worry about what that portfolio is worth because it's really superfluous. What is your portfolio paying you? That's where your focus goes. And that will help keep you stable and strong and focused. The next thing that I strongly recommend is you think about market crashes and pullbacks as, stock take sale opportunity. If you can, keep continuing to invest during these slumps, or even better, set aside a small buffer, or you could call it like an opportunity fund if you like, so that when markets fall, you can actually capitalize on this and buy more of the same quality stocks and ETFs and listed investment companies, and even diversify your portfolio further at better value prices, cheaper prices, because there's a slump, there's a stock take sale. Now, if you're not in a position where you can do this, that is perfectly fine. Even just sticking to that dollar cost averaging strategy that I was talking about is still incredibly powerful, particularly over the long run. The next thing I would recommend is sticking to your strategy, your game plan. It's funny, the hardest part of investing is not when the markets are booming, but it's when they are actually falling and everyone around you is panicking and almost telling you to sell. And this is when your emotions will really be tested. Having a clear long-term game plan is going to give you the courage to hold it steady instead of making fear-driven decisions, which always come with regret. And then finally, for Katrina and all my listeners right now who are investors, We need to accept that recovery takes time. We need to be patient and have faith. The truth is we don't know when the next downturn will happen and whether it will take months or years or even a decade to recover. But history shows us if you do stay invested in, the rewards that you will receive will far outweigh the short-term temporary pain in your life. So how can we put this all into perspective for you? Okay, let's take your example, Katrina. Say you started with $5,000 into this Vanguard high growth ETF, and you're adding, through a dollar cost averaging strategy, say $400 per month. After approximately 20 years, assuming an average net return of 7% per annum, which isn't unrealistic, that portfolio could be worth over $220,000. Now, of course, along the way, you will most certainly experience at least 2, maybe 3, or even 4 major downturns. At some point, your portfolio may even be halved, but that's okay. If you can keep investing, keep reinvesting all of your dividends, of course, that goes without saying, and keep your eye on the long-term big picture and that passive income, those dividends, and whether they're growing or not, you will give compounding interest the best chance to work its magic for you. And remember, compounding interest really starts to kick in towards the end. You've got to remember, it's not about avoiding these crashes and trying to strategically time them and predict things. It's actually about managing your own personal behavior and reactions through them. This is what separates successful investors from just the average everyday investors. And I have a feeling you're going to be a successful investor because you now know this. So, Katrina, to answer your question, unfortunately, no one can predict exactly how long it's going to take for your portfolio to recover when the next crash happens. It could be months or it could be years. But history is very clear on one thing. The markets always recover, and those who stay the course are always rewarded. And myself, I have skin in the game too. I'm an investor, and I've always followed this advice that I'm preaching right now, and I've never regretted it. Your job right now is not to try and time the market, so just park that idea. Your job is to spend time in the market. Focus on building your passive income through those juicy, valuable, exciting, empowering dividends. Keep investing as much as you can afford to regularly through the good times and the bad. And if you dare, if you can, try and use these downturns as opportunities rather than thinking of them as setbacks. Hopefully, you'll now understand why I get excited when the market does crash and has pullbacks, because I go shopping for shares, which means I'm buying more passive income streams. And never forget, one day when your dividends are paying your bills and paying for your lifestyle, you will be so glad, you'll be so relieved that you didn't let the silly short-term fear rob you of what your long-term freedom is going to look like. So thank you so much for Katrina for your really thoughtful question. And I really hope that this podcast episode has given you the clarity and confidence that you are looking for to help you stay the course and continue on investing in your portfolio and your wealth creation strategy. Now, for anyone else, if you would like me to answer your money questions in the next Start Here episode, please make sure you send me a DM on Instagram at SugarMamma TV, or if you like, at Canna Campbell Official. As soon as I see it, I'll make sure I come back to you as quickly as possible. And if you found this episode really helpful and you know of other people who are investing and having the same similar questions, or even questioning themselves as to what they're doing, please make sure you go and send them this episode right now, because it really may help make a massive difference on their own wealth creation adventure. All right, everyone, thank you so much for listening. And a quick reminder to hold it steady when markets get rocky. You're in it for the long run, and history favors the patient and consistent. I'll see you next Monday morning on Sugar Mama's Fireplay. Ciao for now.
Sam, it's time for me to introduce you to your new crush.
Go on.
Canadian Club Lemon Crush.
Of course, the taste buds have been screaming for a change.
And Canadian Club Lemon Crush is listening, with its balance of lemony zest and the smooth taste of Canadian Club.
Right now, there are 2,500 six-packs to be won. Scan your can or enter online for a chance, and always drink responsibly.
Canadian Club Lemon Crush. This zesty refreshment is your new crush.